Hello, hello, hello. Thank you very much for leaving this in the comments. I think now the audio is working fine. Thank you for joining me in today's weekly webinar, analysis webinar, where we discuss the weekly expectations for the week ahead. What are the most important things that we should look for on the economic agenda, as well as the technical analysis? And we basically talk a lot about technical analysis and our expectations. So we will also need to talk a little bit about what happened during last week, because what happened last week will definitely affect this week in terms of the FOMC meeting, of course, as well the ECB meeting and what happened with the interest rates. So I'm really happy that everyone is here with me today. And of course, as usual, if you have any questions, please leave it in the comments section on this Zoom webinar, and I'll make sure that by the end of the session, all of your questions will definitely have an answer. So let's start by having a look on the economic agenda here. And today, of course, is the 17th of June, and it's a beginning of a new trading week. And of course, the beginning of the trading weeks, we don't have that much volatility. We don't have that much movement in the markets. So when we get down to the charts, we will see that basically in Asia session, probably we didn't have nothing, not a move higher or a move lower. We were basically moving in a sideways range, which is the attitude and the trading behavior of Mondays. And that's why my advice for you is never trade Mondays. On Monday, what we do is we look at the charts, we prepare for the week ahead, and that's why we're having this weekly analysis webinar. And we have a look on the technical analysis. So on Monday, we basically do our homework. We get ready for the week. We check the analysis, we check the economic agenda, and we make sure that everything is in place. And if markets are good enough, we can start trading by the New York session on Monday, after the New York session, because what happens is on Monday, we are still seeing how the market is after the opening. You don't want to be with the people who are first to enter the room. Let them enter, let them place their trades, whether they are bullish or bearish on the dollar, on gold, on whatever it is. And when you see or feel the sense of the market for the week ahead, you can then start taking your actions. So this is basically a conservative approach. And if you ask any experienced trader, he will tell you that Mondays are basically just for stop losses. So we try to avoid this. We get ready on Mondays and we then start trading from Tuesday to the rest of the week. So I hope now the audio is working fine. It was just an issue from my end. Apologies for that. And let's start by having a look on the economic agenda. So basically, we had some tiny indicators or economic indicators from the Chinese economy. They are basically mixed. Some are positive, some are negative. However, they are already out, so there is nothing we need to discuss. And let me tell you, before we discuss the economic agenda, I want to tell you something. During this week, we do expect that it will be a much lower volatile or lower volatility week, because during the past 2 weeks, we have seen a lot. We have seen great movements. We have seen very high volatility. We have seen very high liquidity in the markets. Why is that? Because we had Canada's or the Bank of Canada's meeting, we had the ECB's meeting, we had the Bank of Japan, as well as the Federal Reserve meeting. So 4 central banks were meeting in a span of 2 weeks. We had a lot of movements. We also had the NFP. We also had the inflation numbers from the US. So if you survived the last 2 weeks and the market, you are good to go for this one, because this week is much lower in volatility. We're expecting stable markets somehow. However, there is something that we need to explain is after the FOMC meeting and after the ECB, which is the European Central Bank, they didn't provide any forward guidance. So the ECB, although they cut interest rates, but they didn't basically say what they will do in the next meeting. They said, okay, we have cut interest rates right now. What will happen in the following meetings is something that we cannot tell you right now. So they provided zero forward guidance to the markets. It's not bullish, it's not bearish. the same exactly happened with the Federal Reserve. So the Federal Reserve didn't cut interest rates and didn't raise interest rates. They just fixed it as it is. And they gave little to no forward guidance to the markets. Okay, so they said, as per the speech from Jerome Powell and as per the dot plot from the economic expectations from the federal members, they are looking to cut interest rates this year. How many times and when? It was not really directly communicated to the market. So we don't really know what will happen. Will it be in September? Will it be in December? We don't know. So it was also zero to no or little to no forward guidance. And that's why during this week and the next week, we will focus on two things. First of all, the data from the US economy and, of course, the European economy, because if they don't have any forward guidance, they don't know what will happen and how they will react to the markets. They are like us, okay? We will watch together the economic agenda. We will see how the economy evolves in the Eurozone and in the United States, because according to this data, those central banks will react by raise of cutting interest rates or fixing interest rates. Okay. So, in this time, let me tell you that the economic agenda is really important. Sometimes I can tell you, okay, economic agenda is useless because they already took their decision. But in this time, it's 110% important to look at the economic agenda. That's the first thing. The second thing I want you to look at is the speeches from the federal members or the Federal Reserve members and the ECB members. Because what happened is, let's say, I'll give you a small example. The Federal Reserve had the meeting last week. Today, just today, the Federal Reserve member, he's named Neil Kashkari. I don't know if you're aware of him or not. He said that maybe we might delay the interest rate cuts to December. So instead of thinking about September rate cuts, he said, I would prefer that we would delay it to December. This gives a little more bullish sentiment to the US dollar. And that's why today, although it's a slight upward move, however, markets are reacting to this. So one word can push the markets higher, another word can push the markets lower. We want to know what is the sentiment from the Federal Reserve members. That's number one. And number two is the economic agenda. This is how we will play the markets, because believe me when I say, if I don't know how the dollar will behave, you don't know how the dollar will behave. Even the federal members, they don't really know what they will do regarding the markets, because it all depends on the economic data. And this is the policy that they call as the data dependency. We will wait and see, is inflation going down or not? Is it going down with a pace that we are happy with or not? How about the employment? How about the labor market? And how about the GDP? All of this, as it evolves, as we see new data come in, we will understand how the economies are performing, and then they will take their decision. This is really, really important. Okay. So, having said this, normally I would say that this economic agenda has nothing to look for normally, because there is no data, no inflation numbers, nothing. However, after saying what I've just said, it's really important to look at the economic agenda today. Why? Because after 47 minutes, we will have ECB President Christine Lagarde speak. Okay, she's the president of the European Central Bank. She might say something important. We also have the Guindus from the ECB, another one from ECB who's really important to listen to. Not only this, we have two FOMC members, Williams and Harker. As the previous FOMC member, Neil Kashkari, provided slight bullish sentiment to the US dollar, maybe they will support him, maybe not. We will wait and see. However, on investing.com or any other economic agenda, if you have been following me for some time, I don't really follow the importance measure here. So they give it 2 out of 3. I basically give it 3 out of 3 because at that specific time, if you understand how the FOMIC is reacting and how it's basically making its decisions, you will know that comments from the FOMIC members are basically very important to listen to. So that's something that we will be looking for today. Let me call it the statements day. We have 2 statements from the ECB, Lagarde and de Guindos, and we have 2 statements from the FOMIC, Williams and Parker. That's only to start the week. No basically other important data to look for, okay? Moving on to Tuesday and looking at what we will be having on the economic agenda, we have the ZEW economic sentiment. What is the ZEW? It's basically the economic sentiment in the Eurozone and in the German economy. So it sometimes is important in the market. It gives us somehow a sentiment of how people, investors, and everyone in the economy feels about the economy. Are they bullish or are they bearish? Okay. We also have the core CPI, which is the consumer price index. This is the main inflation measure for the Eurozone. And this will be announced basically tomorrow. A slight increase is expected. Not basically a slight, it's an increase because the CPI is expected to go up from 2.4 to 2.6, which is really bad. And the core CPI is supposed or expected to go up from 2.7 to 2.9. This could basically be very much bad to the euro currency. Why is that? Because they just cut interest rates. Cutting interest rates while inflation is going up, this is really bad because when you cut interest rates, the economy is already suffering. So you cut interest rates, the economy is suffering, and still the inflation is going higher. So this is the phase of the stagflation. When you don't have a good economy, you don't have a good labor market, and still prices are going higher. This is really bad. And that's why the FOMIC is a little bit afraid to cut interest rates earlier. They want to make sure that inflation by no chance will come back to getting up or higher than expected. So let's wait and see the CPI because this will be really, really important to watch on the euro. And I don't know why it's been given 2 out of 3 of importance on the economic agenda. But I'm telling you, believe me, it's 4 out of 3, which is the core CPI. Okay. We also have the ZEW economic sentiment. Yeah, we already explained this, but the one higher here was for the German economy, and here it's for the euro economy as a whole. We also have the retail sales from the US economy, really, really important because if we want to know about or we want to look about how the economy is doing, you must look on the retail sales. If the retail sales are higher, what does it mean? Is it good for the economy? Yes, it is good for the economy, but higher retail sales means that people are still willing to consume goods and services. They are still willing to buy. They are still willing to spend money. And higher spending means higher inflation. So, yeah, it's supposed to be good for the economy if we see that the retail sales are going higher. But I don't really believe that the Federal Reserve would want to see this going higher. They would like to see it at the same levels or at least going down a little bit. Okay. We also have the industrial production from the US economy. This is all, from here. Let me tell you, on Tuesday, it's a packed day from here, from the German ZEW to the core CPI, to the European ZEW economic sentiment, to the retail sales from the US industrial production. We also have de Guindos from the ECB having another speech. So he will speak today, another speech scheduled tomorrow. This is really, really important. I would give all of this data tomorrow on Tuesday, 3 out of 3, when it comes to volatility and importance. Okay. Other than that, we have nothing on Tuesday, just retail inventories, 20-year bond auction. Yeah, it's fine. It's not really that important. Moving to Wednesday, the US session will be off because we will be having the Juneteenth holiday in the United States. So we are expecting lower volatility in the US markets and exports from Japan. Monetary policy meeting minutes, which is the meeting minutes for the previous week meeting. And this is important because although what's happening to the Japanese yen, they neglected and they just didn't change interest rates. So maybe the meeting minutes would provide some clue on whether they are planning to raise interest rates or not. Let's wait and see. And we have the CPI from the British economy. Let's say Wednesday is 2 out of 3, or maybe 4 out of 10, 5 out of 10. When it comes to the importance, we have really nothing, that much important. We can just have a look on the meeting minutes out of curiosity. And we will also look on the CPI from the British pound. And that's it. Moving on to Thursday, we have the Bank of England meeting interest rate decision. So currently the interest rate is set around 5.25%. And the expectations are to leave it as it is. And let's see what they will say about what they are expecting in the near future. We also have the Public Bank of China loan prime rate, expected to leave it as it is. And the initial jobless claims and the continuing jobless claims from the US economy. So yes, Thursday we have two things to look at: Bank of England interest rate decision and the labor market data from the US economy, which is the jobless claims. Okay. Do you know, have we explained before the jobless claims? Okay, let me explain it real quick. What are the jobless claims? Because you will see this on a weekly agenda. It's always there. It's a weekly figure. So it's not announced every month. It's announced every week. In the US, if you're working, okay, say you leave your job for any reason, whether you want to leave your job, whether you have been fired or whatever it is, and you're still looking for a job, they have an insurance for unemployed people, which is the jobless insurance claim or the jobless insurance. You stay at your home, the government will pay for you the jobless insurance. So you get like a monthly salary or something because you are still looking for a job. And I think it's for a time period until you find another job. Okay. Why do we look at this? Because if you look at the initial jobless claims, which is here, this tells you during the past week how many new claims or new applications for this insurance have been submitted. Let's say I'm today working here, okay? If I got fired for any reason, I would go to the government tomorrow to ask for my insurance to be paid to me, right? So this is a new claim because I was just fired today and I'm applying for it tomorrow. So during this week, I'll be counted as a new applicant to this insurance. So this gives you a measure of who is basically applying for new claims. If the number is going higher, this means more people are getting fired or more people are getting jobless, whatever the reason is, whether they are fired or not. I mean, this gives us, some sort of an indication, early indication of the unemployment rate. Because when the number of insurance claims for the unjobless or the jobless people moves higher, those jobless people will then later be counted in the unemployment rate because technically they are now unemployed. So this is the initial jobless claims. The continuing jobless claims are people who are currently getting paid for their insurance claims. So they are jobless, but not newly jobless. They haven't been, they haven't left their job recently. They have been maybe jobless for a month or two, so they are continuing. They just keeps on counting. When this number goes down, the continuing jobless claims means that people who used to be jobless are now getting hired. So once you get hired, you stop getting your insurance. So you drop out of the equation for the continuing jobless claims. So if this number goes down, this means people are getting hired, which is a strong indication of the labor market, okay? Moving forward, we also have the crude oil inventories, another weekly figure. We have explained this before. And on Friday, to wrap up the week, we are having the retail sales from the British economy. As we said, the retail sales is also an early indication of inflation. If this goes higher, means people are consuming, people are buying, people are spending money. And more spending means more demand, more inflation. We also have the retail sales for the Canadian economy. So it's a retail sales week from the British economy, Canadian economy, and the US economy as well. And we have the home sales from the US. Yeah, that's it. So Friday is not really a big week, a big day, I mean. And that's it for the economic agenda for the week. And let's have a look on the technical analysis. If you have any questions, please leave it in the comment section. I'll go through quickly the most important financial assets that most of us trade or look at, like the US dollar, pound, dollar yen, pound yen, gold, US oil, of course, and Dow Jones. Okay. So that's basically what we will be having a look on at the moment. Let me check. We have a question. Okay, that's not basically a question. So we have answered this. Thank you. Hello, hello. Okay. Let's start by having a look on the dollar index. And the dollar, of course, what we do is a top-down analysis. A top-down analysis and starting by the weekly time frame. The previous week was bullish, really bullish. We cannot say anything more than that because, okay, we have a higher low and of course a higher high. So it's a new green, bullish, healthy candlestick moving higher. And let's see what are our resistances and supports on the weekly time frame. So the previous week's candle, it basically broke above resistance. So that was a previous resistance we broke above. And we have nothing other than the following resistance 106. Of course, the resistances and supports on a weekly time frame are not so accurate. However, when we go down to the smaller time frames, we will redefine them. Okay, so on the weekly time frame, the previous week was a bullish one. Current week, it's supposed to be bullish. It's supposed to head higher because we just cleared this resistance. We are heading for the next one. However, as always, this candle might go down a little bit to form the lower wick for the week before going higher. So overall, we are looking for buys, but let's have a look on the best possible entry on the smaller time frames. Here on the daily time frame, maybe we can redefine the resistance here a little bit. Get higher. So we are facing resistance right now here on the 4-hour time frame. Okay. What's happening here? What happened is we broke above this resistance. You can see this resistance, right? This one. That was a huge resistance, pushed lower. We came back, cleared this resistance. However, we are facing another resistance here. So we moved lower. However, if you can see this move lower, we are already creating support here. We can see this on the lower time frame. So creating support after just hitting resistance somehow tells me we are heading higher, because if we had enough bearish pressure from here to move lower, we wouldn't have found support really close to the resistance. When prices do this, prices reject resistance. If they create support near to this resistance, this means that we are just gaining extra momentum to move higher and break above this level to push higher. Okay. So this is what I really think will happen because, yeah, on the weekly time frame, we are still bullish. And don't forget that markets, if they are bullish right now on the dollar index, on the smaller time frame, it's nothing unexpected because Neil Kashkari, as we said, he mentioned that we might stay on higher interest rates till December. We might not see cutting interest rates before December. So, yeah, markets are reacting to this. What's happening right now here is a correction. We have support. To me, as long as we are trading above the 105.45, I'm basically bullish on the dollar index for the week. We might expect weak volatility here during today. As we said, we are just starting the week. So just let it take its time. And then we are heading higher to the levels of 106.10, which is the levels that we have seen on the weekly and the daily time frame. That's 1 hour, 4 hour, and this should be the daily. Okay. I'll not be looking at the euro right now because most probably it will be exactly the opposite. Let's have a look on gold. What's happening on gold? Basically nothing. Basically still a sideways range. So on the weekly time frame, the previous week was bullish. Why is that? Because we had a touch near support, and we mentioned the support previously. I think during the last week's webinar or the one before, we said that we have support here around 2,300. So this weekly bullish healthy candlestick was not any surprise. We touched support, weekly bullish candle. We gained around $38 during the past week. Currently, the gold is moving down a little bit. Is it bearish? It's not. The previous one was bullish. So in order to continue moving higher, and we don't even have resistance here. So on the weekly time frame, we are still supposed to go higher. But this candle, it's normal. It's just edging lower to start the week, just to form this. It's not. Okay. Just to form this lower wick, and then we can continue higher because any candle, I mean 90% of candles, whether they are bullish or bearish, they have a higher wick and a lower wick. So don't get confused. Okay, don't say this week, okay, it's starting bearish, I'll sell. No, it's heading lower. Maybe it will form a lower wick before moving higher. Okay, so this means that basically on the lower time frames, we're looking for buys on gold. And don't tell me that I'm expecting dollar to go higher. I should expect gold to move lower because I said this before and I'll tell it again. The dollar and gold, they are not in an inverse relationship. Okay. Most of the times, what happens is if the dollar is moving higher, you might see gold moving lower. Why? Because gold it's measured in the US dollars. So when we say 2,300, it's a support. 2,300 what? It's $2,300. So we always trade on gold versus the US dollar. So if dollar is going higher, gold supposedly will move lower. However, what will happen if you have geopolitical tensions, you have fears of a recession, and this should support gold to go higher? And on the other side, what if the Federal Reserve will raise interest rates? So people will still buy gold and they will still buy dollar. This is the time that you will see both going higher. And we have seen this hundreds of times before. So they are not basically in an inverse relationship. If markets are stable, they will move in an inverse relationship because they are affected by each other. But this is not a rule. Okay, so this is what I really see on gold. Let's redefine this support here. Yep, just around here, 2290, is it? Okay, so we had this touch, another touch went higher, another touch. Will we go higher? Most probably. This is what I do expect. Okay, even here we created resistance. I'm still on the daily time frame. So this resistance, if it was really a strong resistance, we should have broken lower. However, we found another support following. We found another bullish candle following. So this is basically bullish as per the price action. And on the 4-hour time frame, we are having also, okay, it's a sideways range. It's a clear sideways range. Maybe you can see this here. Okay, so we had a low formed here, a low formed here, two highs around the same level, and it's a ping pong trade. In this case, our bias on the weekly time frame is bullish, right? So if prices move up to the resistance, I will not short because I'm expecting that we break higher. However, on the other side, if prices move lower to support, I might think of buying because on the weekly, I'm still bullish. Between those supports and resistances, between this level and this level, I'll not be buying, I'll not be selling because this is the equilibrium level. Prices can literally do anything, okay? So I'm expecting a bullish move on gold during this week. A break above 2337 is the push higher, or a retest to the level of support 2300 is what we will be waiting for on gold to move higher. Okay, let's clean the charts and we will get back to it, of course, the next week. Having a look on the US oil and starting, of course, with the weekly time frame. Nothing to say. Basic textbook classical chart analysis. We are just moving in. What's this? Okay, we can delete this. We are just moving in a symmetrical triangle on the weekly time frame. So here it's a change in trend. Okay, this can give you an upward move up to the levels of $84 per ounce. It's a weekly time frame. So what's happening is we moved lower, we touched the limit of the lower limit of the triangle pattern and we're moving higher. So it's definitely a bullish thing we are looking at. And the previous week was also bullish, green candle. For the previous week, we gained around $2 or $3 almost. Okay. On the daily time frame, nothing to really mention. Upward move, sideways consolidation, and we are moving higher. Next resistance to target is 80.50. That's on the daily time frame. How about the 4-hour? The 4-hour is still pretty much bullish. That's a move higher, retracement, a move higher. This retracement is taking a form of somehow a rectangle or a sideways consolidation because we have two types of corrections or two types of retracements, retracement by price or retracement by time. So this one here is a retracement, no, not this one. Let's say, yeah, this one. So prices were moving lower, right? This is a retracement by price. Prices retraced to the upside. But this one here didn't really move upside. It moved in a sideways range. So this is what we say or call as a retracement by time. Prices just move sideways. It gathers momentum to continue the move. So this is what I'm looking at. It's a retracement by time. We're moving sideways. to continue moving higher. However, where is the entry opportunity here to buy US oil? Of course, a break below this, break above this resistance is where we will be looking for an upward move. So once we break above $79, we might wait for a retracement and then heading higher, maybe from 79 to 80.50. So it's a 150 pip move. Awesome if we can catch this during this week. Of course, if we touch resistance, move lower, it is what it is. So, but we're still out of the market. If you want to buy now, it's really risky. Just wait for a confirmed break above. So we are on the safe side. Let's have a look on the US. Dow Jones. The Dow Jones basically on the weekly time frame is bearish. Okay. As we said, that was a false breakout. Once we have a false breakout from resistance, we will definitely retarget the previous support, which is this 37,950. Okay, let's redefine our support. Maybe we are looking somewhere around here. 37,750 is where I'll be looking for support. Move lower, retracement, we are heading lower. The 4-hour time frame is bearish. Okay, moved higher, two highs around the same level, lower low, pretty much straightforward. On the 1-hour time frame, what we will be looking for is a move today to the levels of 38,325. That's around maybe 250 pips. No, 100, yeah, 180, 170, something like this. Okay, a break below, we will be targeting our main, or let's say before the main support. We are having also this level, 38,075. So yeah, good move on the Dow Jones that we might expect during this week. However, don't forget comments from FOMIC members, because if a comment from FOMIC member said that, okay, we might cut interest rates earlier than expected, what's happened? Cutting interest rates on the US dollar, this means that the US dollar will go down because people will no longer have higher rates on their investments on the dollar, and they will look for another place to invest their money. One of the, of course, important places which provides some profits with a higher risk is the stock market. So if this happens, the US can just, the US 30, I mean Dow Jones can just move higher without a blink of an eye. Okay, and let's have a look also on the euro, pound, and the dollar yen real quick. Okay, guys, I think this session will end in maybe 10 minutes after we have a look on those. So if you have a question, please make sure that you leave it on the comment section right now, because after this session, I'll be having another one. I don't really believe we will be having much time. And from here, on the euro versus the dollar, we are bearish. Nothing really to look for. That's the support here. That's the resistance. Nothing in between. Clean price action. Rejected resistance. We're getting back to the support. This candle is moving higher. Why? To form the upper wick for the weekly candle. On the daily time frame, we have this level of interest, which was a previous support. We broke below. We might come up for a retest. This retest should give us, you know, the daily higher wick or the weekly higher wick that we are looking for before moving lower. So yeah, the euro is for shorts. We are looking to sell the euro, but maybe prices here are not the best yet. Don't short right now. We will wait for this level around here. 1.0740 is what we will be looking for on the 1 hour time frame. It's really clear. Move lower, retracement, break below support, retracement, retest, and we will move lower. So from here, I do really believe a 27, 20, 30 pips, let's say, higher is expected before moving lower. What's happening on the pound? Let's conclude this session. Okay, on the weekly time frame, pretty much clear. That was a clear resistance level, a false break to the upside, but we had resistance 1, 2, 3. Remember, guys, during the last 2 weeks, I've been calling out shorts for the pound. I've said multiple times, I'm looking for shorts on the pound. And it's still bearish, but due to the high volatility that we had during the past 2 weeks, we have had those really silly higher wicks. So it tried to go up once, twice, and 3 times. However, technical analysis says it should go down. So it should go down, okay? Let's remove this. It's on the weekly anyway. So this is what I'm looking for, or this was what I was expecting to happen, because remember when we said the divergence was really bearish, we have a bearish divergence. So this upward move wasn't really convincing. And we also broke the structure. We also broke the previous lows, okay? This is the level of support, broke below, and it's really bearish. I would say maybe you can head higher for a retest, levels of 1.2690 before moving lower. So it's pretty much the same like the euro. A move higher is expected just to start the week, create this weekly higher wick, and then move lower. How about the dollar yen? I think we have a question here. If DXY go up, dollar peers go down. Which market is inverse? Pounds peer? Not really getting your question, but if dollar goes up, dollar peers will go down. You mean the euro and the pound and so on? Yeah. But it's not a perfect relationship, because the dollar index is a calculation of the dollar strength against the main currencies, which includes the euro, the pound, the Japanese yen, and so on. But they don't really have the same weight in the calculation of the dollar index. The most weighted currency in this dollar index is the euro. That's why you see that if dollar goes up, euro will go down 99% of the time. Then follows the dollar yen, and then the pound, it's less effective, and so on. The pound really doesn't have peers, but in the pound, you will have to check each currency individually. So let's say you're trading pound yen. If you want to confirm that your analysis on pound yen is somehow correct, you will then check other yen pairs, Japanese yen pairs, okay? It's not a perfect relationship. I hope this answers your question. What about the dollar yen? Absolutely nothing. The Bank of Japan neglected the markets during the last week. So the logical response from markets is that they will sell anything that has Japanese yen on it. I mean, the currency itself, which means that the dollar yen is supposed to go up. So on the weekly time frame, we can see we moved lower, formed support, moving higher. On the daily time frame, pretty much the same. Absolutely bullish, in my opinion. On the 4-hour time frame, okay, yeah, let's say that we are just expecting that the dollar yen target the levels of 158.35 during this week. Let's say we are targeting the previous week's high. We have a clear move of 60 pips. I think we can reach this maybe today or tomorrow. And don't touch the Japanese yen unless we have the meeting minutes from the Bank of Japan, which is to be released during this week. We have already explained this in this economic agenda. So yeah, that concludes our session for today. We have explained a lot about the technical analysis. Thank you very much, Fasikul Miftah. Thank you. Thank you, Ron, for your questions and your engagement. Thank you, everyone, for joining me in today's session. Of course, I'll see you again next week in the same time on Monday. And to be clear with you, today I was supposed to be on holiday because we're having our Eid al-Adha. I wish everyone a blessed Eid al-Adha if you're somewhere or you're Muslim. But however, markets never sleep, so I should have attended the session with you guys. And I'll definitely see you next week. We won't be having any holidays, and we will make sure that we will always be with you during this weekly analysis webinar. Thank you very much. I'll see you again next week. Stay safe and trade safe.